This is Edible Economics, bringing you the important topics of our times as we turn noisy headlines into bite-sized issues you can actually digest. This program is for information only, not investment advice. Here's Andrew Tang.
Hello, everybody. Welcome to another episode of Edible Economics. And today I am joined with Michelle Connell. Michelle Connell is the founder and the chief investment officer of Porsche Capital. That's located in Texas. She's also a CFA, which is a charter holder of a financial analyst for more than 20 years. And her expertise lies in investing, portfolio management, private equity, hedge funds, real estate, and alternative investments. Welcome, Michelle.
Thanks for having me, Andrew. Pleasure.
Great. Today, we're going to talk about cybersecurity. Cybersecurity, we're going to talk about, break it up into 3 to 4 parts, for the most part. And it will be a very interesting dialogue. I can't wait to get into it. We're going to talk about the breaches, how cybersecurity software is used today, and then the valuation. What can we do with it from an investment standpoint? But then again, full disclosure, this is not investment advice. Everything that we talk about today is just for educational and entertainment purposes only. Okay? So great. Let's get started. So, Michelle, do you know what happened with OpenAI and Hugging Face recently?
I know it on a peripheral level. Why don't you go deeper?
Yeah. So for a lot of people that might not know this is that OpenAI, as you know, the company that's behind ChatGPT, they were running some tests with agents. Okay. Agents, it's the system that basically are doing things versus a large language model that is based on more of a chat interaction, right? So AI agents are the piece or the mechanism or the module that actually go out there and do things for you when you give it access. Like, for example, somebody working for you remotely, right? This is very similar to that. But instead of a human, behind the scenes, it's the computer, it's the machine, it's the program. So during a cybersecurity testing, OpenAI agents were placed in a restricted environment to test their capabilities, right? It's like basically they call that a sandbox. You're not supposed to be able to go out of the sandbox. But some of OpenAI's agents ultimately gained unauthorized access outside of those environments, and they reached a system of Hugging Face that belongs to Hugging Face. And this breach, to many experts in the field, it is just tip of the iceberg of what's to come when it comes to cybersecurity, right? Meaning AI agents, it's going to grow and it's going to overtake on the large language model, on where it is and how we're using it today. Experts believe that with AI agents, they are already responsible for 50% of the internet traffic right now, Michelle. Already 50%. Into the future, they believe, an executive from Cloudflare believed that this will increase by 1,000x. So from that point of view, it's going to be a lot of automation when it comes to internet traffic. And therefore, the issue of cybersecurity couldn't be more relevant at this time. Michelle, what is your take on that?
That's what I thought was so interesting and amusing when you saw so many of these stocks being hit, earlier this year, that everybody basically threw out anything that was cybersecurity related. And we need those stocks and those companies more than ever. You can't just have an AI company create their own cybersecurity. Things move too fast. It takes too much to customize what you need. And so, as you said, that traffic is going to just balloon. And so this is going to become a bigger and bigger problem, not only because of the amount of agents you have, but how quickly things are going to move with AI. How quickly an AI agent, a nefarious one, could find, a way to breach something within a company.
Yeah, that's the part I think investors need to understand, is that we're moving from human attack plus software, like malware and phishing emails and the prince from Nigeria telling you won an inheritance or something,
Yep.
towards, machines and AI agents and software and automation, and machines don't sleep, and they can attack you 24/7 and basically break the barrier ultimately. And that is the danger that it is really, having quite a bit of a moment for me, at least, to try to grasp the intensity and the amount of damage that the situations can do. And another incident that I want to talk to you about, it's a little bit different from this. It's from North Korea. Now, as you know, a lot of bad actors in different countries. I'm not isolating, just Russia and North Korea. But recently, there's been reports, especially by the ones that's done by the Wall Street Journal, is that perpetrators, young people from North Korea, they are pretending to be U.S. citizens. They steal their identity and they are applying for IT jobs that works remotely with corporations around the world. So this is a very interesting video, and I'll put the link here to the video on the screen.
Great.
And on the comments below. Watch it. It is very, very intriguing and funny because it cites a few of the interviews of the companies that are doing the hiring. They say that, we receive information that there are bad actors out there pretending to be, people looking for work in the IT profession. So can you say this for me? Can you say Kim Jong-un is a big fat pig? And then you will see the candidate all of a sudden freezes up because they can't say it. They can't say it. And that is such an aha moment. It was crazy.
Wow.
I got goosebumps when I watched it. I thought it's funny.
So that's the test, the little miss test right there, is asking that one question. Then whether or not you have a fraud.
Yeah, exactly.
Wow.
What happens is that those bad actors, they steal the identity. They buy the identity in the black market, and then they have like a ChatGPT alongside with them to listen to the interview and have them help you answer the questions. So that's how they cheat on the interview. First, they impersonate to be another legitimate US persons, and then they cheat by having an AI, a large language model on the screen, which the interviewer cannot see, and help them answer those questions. So the unsuspecting firms in the earlier days, they didn't know, and they hired those people. And then see, the thing about what happened previously is that they were just trying to make money, and they were just sending money to the North Korea, regime or whatever, right? But the next step is that if they are infiltrated into the existing corporate environment, then we have a larger issue to deal with, because IT professionals, they are one of the groups that's going to be given access, to information. So we're talking about corporate espionage and spying issues, and it's a big deal.
Yeah, no, it definitely is.
Yeah.
Interesting.
Yeah. So another misconception that people hear of cybersecurity is that they're still thinking about antivirus software. And that's really not what the industry look like anymore. You got endpoint security, you got network security, you have cloud security, you have identity management, you have data security, application security, and then zero trust, right? And then the security operations center monitoring all of this. Michelle, from an investment perspective, what do you think about the cybersecurity ecosystem? Are we ultimately heading towards a handful of giant platforms rather than companies selling dozens of individual security products?
We may be moving towards that, but I think it's a slower march, or it's going to take more time than we think. That's why some of these stocks, like let's say like an Okta, I did own Okta because it was one of those that was so beaten up, and they're more focused on identity security. That's their profitability, is be able to focus on that. For individual companies, you're still going to have, players like that are going to continue to do well. Maybe they'll continue to buy up others and get folded into the bigger, mega companies. But I think it's going to take some time. And I definitely don't think like the Anthropic or OpenAI, it's not going to get to that level yet where they are able to do everything.
Right. And for those existing customers, like, for example, if you remember not too long ago, remember Microsoft had that outage with CrowdStrike, right?
Yep.
But
yep.
And then CrowdStrike's stock, I think, tumbled at that time. But I tell you, it is really still sticky money. And CrowdStrike and Palo Alto and these probably are the two top names in cybersecurity that are publicly traded within the sector.
Well, even like Salesforce. I mean,
Salesforce
once you are indoctrinated into one of these softwares, it's really hard.
It's very difficult to switch.
Yeah, to untether yourself. So a lot of these names, especially the bigger ones that have a lot of subscription subscribers, they ain't going there anywhere for a while.
Right. And that's really important because we did witness a SaaS apocalypse recently.
Yes.
Right.
Yes. Mm-hmm.
And for those who don't know what that is SaaS is software as a service. Apocalypse is basically a nasty sell-off. It's the end of that because the view or the rhetoric on that front is that with the rise of AI agents, software companies will no longer be able to make money because agents would just basically be able to bypass software companies. So companies with a software subscription that you have to pay, are going to be ultimately go out of business or the revenue is going to be greatly reduced. Now, I believe that's true for many software companies that don't have an edge, but out of this whole group of software, I strongly believe cybersecurity is the subgroup within software that is going to be sustainable. What's your take?
I would agree with you on that. And when we had this SaaS apocalypse or whatever, however you want to pronounce it,
apocalypse.
It became really a great opportunity because you had the shorts just going in and shorting the heck out of these names and just beating them up to really, very inexpensive multiples and bargains. And so, whenever you see something like that, where a blanket statement is made that AI is going to take out this particular industry or other technology, that becomes an opportunity as an investor. It was a great time to come into some of these names.
Yeah, it's true. And for those who follow the market recently, you can probably see that from like late June or mid-June till August. I say those 2 months were a great retrace or sell-off of chips companies, software companies. And I think Michael Burry, it's responsible for that because he's the one who went public to say that he was short the market, and he named a few companies in there. And I think the shorts and the bears basically took over that period. However, I called certain software companies like Microsoft, I called that a zero layer software companies because they're responsible for databases and also for operating systems. And then the layer ones are the one behind the database. And then now cybersecurity, it's a whole different category. So out of those software companies, I think these are the ones going to be more relevant. Yeah.
Well, I think what's also adding volatility to technology, and it also happened to the software space, you had these leveraged ETFs and you had retail investors jumping into them when you have these supposed technology sell-offs, that are, they have some relevancy behind them and they really don't. And so that really creates even more volatility and downside and a quick whipsaw on the upside.
Yeah. Be able to authenticate a communication and having that communication be secure, that is the intricacy of protecting the integrity and securing, the day-to-day business. And again, with the rise of AI agents, I think this is just going to be growing exponentially. And then without going too deep into this, and I will just touch very lightly, because a lot of people are really non-believers of digital assets, of digital tokens, and basically Bitcoin and stablecoin and all that. But why is it so relevant and why is it important? I think the rise of AI agents is really the main reason why, because without tokenization and having a digital asset, an AI agent, when you task it to do something, sometimes they have to pay a toll. There's
Yeah.
no way on earth that AI agent is going to use fiat currency or US dollars that needs 2 days to settle. There is no way of that happening. And that's why I believe with this crypto winter that we have experienced, and out of this short covering that we saw in the last 2 days, I also believe cybersecurity and the digital asset arena, these two are going to grow hand in hand. And I think their relevance are going to be more and more important. What's your take?
I think it's a very relevant point. In the past or up until this point where AI has become more prevalent and more adopted, it was more cryptocurrency wasn't not so much a big deal, but your
Yeah,
point about paying a toll, I think that gives it, more relevance and
absolutely.
more credibility versus people weren't really, and corporations weren't, they didn't have to use it for paying for a transaction. Now they may not have a choice.
Yeah, yeah. And now let's talk about valuation. And this is where you're going to put your CFA hat on, right?
Okay.
Because there's an obvious problem with investment thesis, right? Because why?
Yeah.
Because these stocks are not cheap, not cheap at all. Now, the market knows cybersecurity is important. Companies like Palo Alto, CrowdStrike, Fortinet, Zscalers, they're all attracted enormous investors' attention. So, Michelle, let me ask you this. If we challenge the bullish case, at what point does a great secular growth story becomes a bad investment because you simply pay too much for it?
It's a difficult question to answer because if we just looked at it in terms of discounted cash flows, nobody would jump into these names. You really have to look at it in terms of the moat or the competitive moat that these companies have around them. If you feel that it's going to last for the next 3 to 5 years, if they're potentially buyout candidates, and you also have to weigh, how much downside could they have now if these things are totally beaten up, and they still may be expensive, but they're at a much lower multiple, on a price to sales basis than they've had in the past, or you really can't look at PE. I look closer to a price to sales basis.
Right.
Then, if it looks cheap versus its, average, I would consider it and look at its historical downside as well. And if it looks like, you have potentially more upside than downside on a historical basis, and you think it's growing faster than it has in the recent past because of AI, or it's got segments of its business that are becoming a higher percentage of sales, it can look interesting, but you can't look at it from a pure valuation standpoint, which is my training. So I have to
Yeah.
be a little bit more creative, or else you're never going to go into these names.
Yeah, it's true. Just like you can't really value a Walmart or a Costco, comparing to a tech company, right? Just like the same,
Yeah.
you can't value a biotech company, which is never designed to make any revenue or profits, to begin with, is all about IPs, comparing
Yeah.
to, like a retailer, for example. I mean, Walmart just reported they beat their earnings, but guess what? I just found out why they sold off, because they were trading at about 30 times, their
Right.
revenue.
Right. And now their sales were the lowest they've been for 6 years, and now they're not as confident that things are going to be as
Yeah.
strong going forward. So they were kind of seen as the ballast or the foundation of owning a retail stock. Not so much anymore.
Yeah, it is true. Yeah. Same thing with Costco. I think before the sell off sometime in May, Costco was trading at 50 times. And
Yeah.
so that's why in terms of valuation, and then when you have that coincide with the really low level of consumer confidence because people are just not so sure about their jobs and their situation, and with inflation and everything else that you put in there, the whole caputo, as they put it, then that's why it's natural for consumer or retail stocks to sell off. But going back to this area, I still think even though the valuation might look high, I still think that this area has, quite a bit of potential. And that's a huge distinction that investors sometimes miss. A great company isn't automatically a great stock every day, but there's another number that I do find interesting. A research firm, Gartner, estimate worldwide that information security spending at roughly about $244 billion this year, right? But if we look specifically to AI cybersecurity, Gartner forecasts approximately 26 billion in 2025, 51 billion in 2020. That's almost a double in 1 year, and potentially 86 billion in 2027, and that's just next year. Now that's extraordinary growth, right, Michelle?
And I think that's what you need to consider when you're looking at the individual names, or even if you're looking at, you want to own a basket because you don't want to have the risk of just owning an individual security stock and you decide to own an ETF. You can look at the average multiples there, but then, as you said, look at the growth in the next few years of the revenue potentially. And a lot of times the multiple is going to be lower than that 50% growth. So it's worth consideration, at least for the next couple of years, to own something like that.
Yeah. And I think when it comes to investing in cybersecurity, it doesn't necessarily have to be all publicly traded companies. Michelle, why don't you talk about outside of the publicly traded space, like what are some of the opportunities, and you can probably share your experience as well.
It's been a rocky experience in the last couple of years because you've got a lot of winners, but you have losers as well, that because a security firm may not be, as you said, specifically in the right area of security. So you've had a lot of roll-ups and you've had some write-offs in that space. But at the same time, there's some outstanding opportunities still in the private space. Now, it's interesting in terms of what venture capitalists are pitching right now. They've kind of backed off from that, right? Because it's not as popular. So if you look at the majority of what is selling to investors, no surprise, they know that they can get an AI idea oversubscribed. So I'm still seeing a lot of those. I'm seeing new AI chips. I'm seeing new AI language models, a lot of different things like that, or a business that, is at the forefront of using AI. So you're seeing less of the software companies, but there's still some opportunities there because everybody wants the AI. There may be an overvaluation of those for that reason, and you might find some bargains that are privately owned.
Yeah, I agree. But access to these private investments is not equal or not as democratic as we like it to be. There are some diversified venture-like funds vehicles out there, and some are called interval funds that you can buy in every day in the open market, but it's quarterly liquid when you want to get out. Yeah, there are some of those that are out there. So, investing in a basket, I think it's a safer way for, most investors to be able to have access to. You don't necessarily have to buy 1 or 2, 3, 4, 5 companies. You can just buy an ETF, and there are many good ones out there with the cybersecurity label. I think having that tactical allocation will bring nice balance to an overall portfolio.
Isn't there one actually, an ETF, CIBR?
CIBR. I think that's
I own that one.
First Trust.
I own that one.
Yeah. And then there's the HACK hack that I've been using for a long, long time. Again, these are not investment advice. You should do your own research and check them out. But having a basket of, especially, with the one with the lower cost makes a lot of sense.
Definitely.
So great. Michelle, let's talk about whereabouts are you? Which part of Texas are you at?
I'm in Fort Worth, North
Fort
Texas.
Worth. Yeah.
Yes.
So supposedly robo-taxis are going to be launched there very soon. That's the rumor I hear.
In this part of Texas? Really?
Well, not exactly Fort Worth, but I know they're going to be offering and launching in Austin, in Dallas, in Phoenix, and also in Las Vegas. Those are the 4. There could be more, but again, the world is progressing, is moving towards the new future, the here and now in a much faster pace. And again, I want to thank you today for your time, Michelle. I think you just finish interviewing with Bloomberg, right?
Yes,
so
I did.
I
Yes.
value your time, and we will do another pod very soon.
Thanks, Andrew. Appreciate and the privilege to be on your show.
Thank you. All right. I'll see you soon. Take care, everybody.
Thanks.
The views expressed on Edible Economics are for informational purposes only and do not constitute an offer to buy or sell any securities. Market conditions can change without notice, and past performance is never a guarantee of future results. Investment involves risk, including the possible loss of principal. Andrew Tang and Turner Financial Group Incorporated do not provide tax, legal, or accounting advice. You should consult with your own professional advisors before making any financial decisions. Turner Financial Group is an SEC-registered investment advisor. For more information, please visit advisorinfo.sec.gov. Advisory services are only provided where properly licensed and under a formal client service agreement.